Yes, Mr. Buffett, I would like to thank you again for issuing that Class B shares.
Well, I'm glad we did, and I hope you own them.
And I'm a Class B shareholder. I need your comment on some analysis that we did. If someone uses your investment philosophy of building a highly concentrated portfolio of 6 to 8 stocks and adopts your buy and holding principle so that the maths of compounding and no tax works for you. But however, with one major modification, invest in high octane companies like Intel and Microsoft that are growing at 30% instead of typical 15% growth company in your portfolio. My question is, will this investment philosophy will translate into twice the shareholder return as you have historically provided to your shareholder?
Yeah. Well, it will certainly work out to twice the return if Intel and Microsoft do twice as well as Coke and Gillette. I mean, it's a question of being able to identify businesses that you understand and feel very certain about. And if you understand those businesses, and many people do, but Charlie and I don't, you have to understand those businesses, and many people do, but Charlie and I don't. You have to evaluate them, and if you decide you're going to do very well. But there's a whole group of companies, a very large group of companies, that Charlie and I just don't know how to value, and that doesn't bother us. I mean, we don't know how to figure out what cocoa beans are going to do, or the Russian ruble, there's all kinds of financial instruments that we just don't feel we have the knowledge to evaluate. And really, it might be a little too much to expect that somebody would understand every business in the world. And we find some that are much harder for us to understand. And when I say understand, my idea of understanding a business is that you've got a pretty good idea where it's going to be in 10 years. And I just can't get that conviction with a lot of businesses, whereas I can get it with relatively few. But I only need a few. As you pointed out, you only need a few, 6 or 8 or something like that. It would be better for you, it certainly would have been better for you, if we had the insights about what we regard as the somewhat more complicated businesses you described, because there was and may still be the chance to make a whole lot more money if those growth rates that you describe are maintained. But I don't think you'll find better managers than Andy Grove at Intel and Bill Gates at Microsoft. And they certainly seem to have fantastic positions in the businesses they're in. But I don't know enough about those businesses to be as sure that those positions are fantastic as I am about being sure that Gillette and Coca-Cola's businesses are fantastic. You may understand those businesses better than you understand Coke and Gillette because of your background or just the way your mind is wired. But I don't, and therefore I have to stick with what I really think I can understand. And if there's more money to be made elsewhere, I think the people that make it are entitled to it. Charlie?
Well, if you take a business like Intel, there are limitations under the laws of physics, which eventually stop your putting more transistors on a single chip. And 30% per annum or something like that. I don't think those limitations are still a good distance away, but they're not any infinite distance away. That means that Intel has to leverage its current leadership into new activities, just as IBM leveraged the Hollerith machine into the computer. Predicting whether somebody's going to be able to do that in advance, it's too tough for us.
Bob Noyce.
We could quit it to you.
Yeah. Bob Noyce, one of the two primary founders of Intel, grew up in Grinnell, Iowa. I think he's the son of a minister in Grinnell, and went to Grinnell College and was chairman of the board of trustees of Grinnell when I went on the board of Grinnell back in the late 60s. And when he left Fairchild to form Intel, Gordon Moore, Grinnell bought 10% of the private placement that funded, was the initial funding for Intel. And Bob was a terrific guy, very easy to talk to, just as Bill Gates is. I mean, these fellows explain the businesses to me, and they're great teachers, but I'm a lousy student. And they really do it. They're very good at explaining their businesses. Bob was a very down to earth Iowa boy who could he could tell you the risks and tell you the upside, and enormously likable, 100% honest every way. So we did buy 10% of the original issue. The genius that ran the investment committee managed to sell those a few years later. I won't give you his name. And and there is no prize for anybody that calculates the value of those shares. Now, incidentally, one of the things Bob was very keen on originally, in fact, he was probably the keenest on it, was he had some watch that Intel was making, and it was a fabulous watch, according to Bob. It just had one problem. We sent a guy out from Grinnell who was going out the West Coast to where Intel was, and Bob gave him one of these watches. And when he got back to Grinnell, he wrote up a report about this little investment we had, and he said these watches are marvelous. He said without touching anything, they managed to adapt to the time zones as they changed. We went along. In other words, they were running very, very fast, as it turns out. And they worked with that watch for about 5 or 6 years, and they fell on their face. And as you know, they had a total transformation in the mid '80s when the product on which they relied also ran out of gas. So it's not easy. And Andy Grove has written a terrific book, incidentally, Only the Paranoid Survive, which describes strategic inflection points. I recommend that every one of you read that book because it is a terrific book. But they had an Andy Grove there who made that transformation along with some other people. But that doesn't happen every time. Companies get left behind. We don't want to be in businesses where we feel companies can't be left behind. That means that, and Intel could have and almost did go off the tracks. IBM owned a big piece of Intel, as you know, and they sold it in the mid-'80s. So, here are a bunch of people that should know a lot about that business, but they couldn't see the future either. I think it's very tough to make money that way, but I think some people can make a lot of money understanding those kind of business. I mean, there are people with the insights. Walter Scott, one of our directors, has done terrifically with a business that started, just a gleam in the eye, maybe 10 or 12 years ago here in Omaha, and it turned into a huge business. And Walter explained that to me on the way down to the football games, but bad student again. So Walter connected, and I'd cheer from the stands. But that doesn't bother me at all. I mean, what would bother me is if I think I understand a business and I don't. That would bother me. Charlie?
Well, having flunked when we were young and strong at understanding some complex businesses, we're not looking to master what we earlier failed at in our latter years.
Hello, my name is Larry Widman from Minot, North Dakota. You have both talked today about the shrinking universe of stocks you could purchase, less margin of safety than ever, and a higher opportunity cost. And you've also talked about looking to potentially purchase your great companies that you already have at reasonable prices. And so I wonder if by talking so positively about some of your stocks, in particular Disney, such as in the 95 annual report when you talked about actually telling everyone that you were buying more shares on the open market, and again at the 97 meeting, at their meeting when you talked about maybe not selling the shares, those were both opportunities maybe when Disney may have dropped because of such things as increased debt or even people's concerned about the OVIT's compensation package. And I just wonder if that may hurt your ability to buy these great companies at reasonable prices by talking so positively about them when in fact maybe you could buy them at lower prices when people get irrational.
Yeah, you're saying that, which I probably agree with, that if we would say the world is going to hell at Coke or Disney or Gillette, we might be better off in terms of being able to buy more stock. But, I got asked a question at Disney, and I answered it, and that's my general approach. That I think it's usually a bad mistake to sell your interest in wonderful businesses. I don't think people find them that often, and I think they get hung up if they've sold them at X that they want to buy them back at 90% of X or 85% of X, so they'll never go back in at 105% of X. So I think on balance, if you are in a business that you understand and you think it's a really outstanding business, that the presumption should be that you just hold it and don't worry. And if it goes down 25% in price or 30% in price, if you have more money available, buy more. And if you don't, so what? Just look at the business and judge how it's doing. But there's no question. I mean, we try not to talk very much about the businesses, except maybe to use them as an illustration in a teaching mode or something of the sort. We're not touting anything. And I did try to stick those precautions in when I do talk about them as being wonderful businesses, so people don't take it as an unqualified buy recommendation or something of the sort. But we won't try and put any spin on it when we're talking about business generally. We may not talk about them at all. If we're buying something, we might be, that particularly if no one knows that we've been in that stock at all, we might be somewhat quiet about the fact. But we don't want to talk down something in order to buy it. Charlie?
Jerry Newman, as I understand it, didn't like Ben Graham giving all these courses explaining what Newman and Graham were doing. But Graham's attitude was that he was a professor first, and if he made just slightly less money by being very accurate in what he taught, why, so be it. And I think it's fair to say that Warren has assimilated a bit of that ethos. And I think it's all to the good. And if it costs us a tiny little bit of money from time to time, there are probably compensating benefits. And if there aren't, it's probably the right way to behave anyway.
Charlie, if you were in a less charitable mood, might point out I didn't behave that way till I got rich. Actually, I used to teach a course at what was then the University of Omaha, and we used all these current examples, and things were so cheap that nobody paid any attention. Area 3.
Hello, Mr. Munger and Mr. Buffett. My name is Liza Rima from Burbank, California. I wanted to find out, earlier you mentioned you used filters to look at a company. So could you elaborate on what those filters are?
Charlie, you want to?
Well, we've tried to do a good deal of that, and opportunity cost is a huge filter in life. If you've got two suitors who are really eager to have you, and one is way the hell better than the other, you do not have to spend much time with the other. And that's the way we filter stock buying opportunities. Our ideas are so simple, people keep asking us for mysteries when all we have is the most elementary idea.
Yeah, the first filter we probably put it through is whether we think and we know instantly, I mean, whether it's a business we're going to understand, and whether it's a business that if it passes through that, it's whether a company can have a sustainable edge, and that gets rid of a very significant percentage of the things people. They always want to tell you some story or anything, and I'm sure they regard me and Charlie as very arbitrary in terms of, in the middle of the first sentence saying, well, we appreciate the call, but we're not interested. I mean, they just think if they explain something, and if I get letters on this all the time, but we really can tell in the middle of the first sentence usually whether those two factors exist. And if we can't understand it, obviously it's not going to have, we can't make a decision as to whether it has a sustainable edge. And if we can't understand it, we very often can come to the conclusion that it's not the kind of business where it will have a sustainable edge. So 98% of the conversations we can end in the middle of somebody's first sentence, which of course goes over very big with the caller. But and then sometimes, if you're talking about an entire business, we can tell by who we're dealing with whether a deal's ever going to work out or not. I mean, if there's an auction going on, we don't want to. We have no interest in talking about it, and it just isn't going to. It isn't going to work. If someone is interested in essentially doing that with their business, they're going to sit down and want to renegotiate everything with us all over again after the deal is done, and we're going to have to buy the business 2 or 3 times before we get through. You just see all these things coming, and on the other hand, we've had terrific experience basically with the people we have associated with. So it works. It's efficient. We don't want to listen to stories all day, and we don't read brokerage reports or anything of this sort. It's just there's other things to do with your time. Charlie?
Yeah. Another filter that Warren was alluding to is this concept of the quality person. And of course, most people define quality person as somebody very much like themselves. But
identical, actually, is the word we are searching for.
But there's so many wonderful people out there, and there's so many awful people out there, and there's signs frequently like flags, particularly over the awful people, and generally speaking, those people are to be avoided. It's just the amount of misery you bring into your life by trusting some awful person, and the amount of felicity that you can bring in by making the right business associations. Look around this room, and there's some wonderful people who have created some wonderful businesses, and their customers can trust them, the employees can trust them, the problems can trust them to be fairly faced and reasonably solved. And those are the kind of people you want to, and people will take their promises seriously. I had some experience recently with a company, and they have their brand on a particular product, and somebody invented a better product in the same field, and they're taking their brand off their product. I mean, if it isn't the best, they don't want their brand on it. People who think like that frequently do very well in business, and the flags are flying. Yeah. I mean,
it's like they got a sign in it just says jerk, 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 and then you think you're going to buy the business, and they aren't going to be a jerk, anymore. I mean,
right. Right.